Hello guys, my name is Davud. I made this video to show you how to incorporate volume in Forex trading analysis. And I know there are lots of videos out there talking about using volume in Forex, using VSA method in Forex, and even using the Wyckoff method, and all of those old school stuff. But there's a problem with all of them. The problem they have is that they have a big misunderstanding in the concept of volume in Forex. So what is tick data and what is real volume? A lot of people say they are different aspects of the same thing, or at least they represent the same thing. But we're gonna first talk about how they are made, how they are formed, and then we're gonna talk about the differences. First, the volume. Volume is made of a combination of buying and selling. So the basic concept is, if there is more buying volume than selling volume, the value of the currency would increase and the price of the currency would go up. And this is the same thing about the opposite. If the selling volume is more than buying volume, the value of the currency would decrease and the price of the currency would fall down. So this is the basic knowledge about incorporating volume in your trading analysis. For this topic there are many books written and those are available in the market. But there is a problem. All of these books work in markets with centralized exchange places like stocks. For the markets without centralized exchange sites like Forex market, we don't have real volume data. So the only type of data which is available is tick data, which shows the amount of currency pair movement in a certain amount of time. Now there is where the ambiguity starts. A lot of advertisements come up every day trying to sell you the videos, the DVDs, or even the softwares that would use tick data instead of volume data in markets that we don't have the real volume available. And in addition to Forex market that literally doesn't have a centralized exchange place to give us the volume info, in markets like stocks and futures, we also have to pay some corporations like eSignal, like Kinetic, to give us reliable volume data. But what if we don't have such amount of money? Do we really make enough money to pay $50 per month for just data feed? Is data feed that important for us? There's questions to be asked. And if you don't have such amount of money to pay just for data feed, and if you're trading Forex that doesn't have data feed available, can we just rely on tick data and assume this is the representative of the real data? Unfortunately, what the creators of these videos and softwares don't understand is the fundamental difference between volume data and the tick data. Let me show you this by an example. Let's say we're looking at Euro USD pair. Suddenly a huge amount of selling comes in the market. Thousands of contracts are sold. And on the other hand, a little amount is bought. Let's say 10,000 contracts are sold and 100 contracts are bought. As I said earlier, more selling than buying drives the price down. But how much? 10,000 contracts selling, 100 buying, the bulls have no chance but to give up. The price drops heavily. Now what does the tick data show us? How much tick activity does this action cause? A low amount. If this surprises you, I'm gonna tell you why. Just look at the fundamental meaning of tick data. In this battle between bulls and bears, there is actually no struggle between bulls and bears. Bulls give up easily, Bears win easily. There isn't a time where the price goes a little up, then falls back down, goes a little up, falls back down, which is called the choppiness of the price, around fundamental releases and so on. There is no choppiness of the price. Price just falls down easily. Now consider another scenario. Suppose a market that doesn't have a determined way. There are buyers, there are sellers, and actually no one has more power to win the battle. So what does the price do at this time? The price starts to get choppy, moves up, down, and it actually doesn't have a determined way. In a short amount of time, a lot of activity is produced. Now let's compare these two cases. In the first case, there was actually a high amount of real volume coming into the market, but as there was no struggle between bulls and bears, the price gave up easily, it fell down easily. Now in the second case, there was an actual struggle between the bulls and bears. Price actually went up, went down, had a lot of movement, had a lot of activity, which means it had a lot of tick activity. As you can see from these two examples, tick volume doesn't necessarily represent real volume, but actually in these two cases show exactly the opposite thing. Now, does this tick data have any value? The answer is yes, but under one condition, that we interpret them as they are and don't misunderstand them as real volume. Look at the definition of tick volume. This is the amount of activity, the amount of struggle between the bulls and the bears. Little tick volume means low struggle between the bulls and the bears. High tick activity means a lot of struggle between the bulls and the bears. High struggle between bulls and the bears means uncertainty in the direction of the price and in the movement of the price. Now let me show you what we've discussed already on a chart. I used tick data which I get from my broker, which is also free, on Euro USD 1 hour chart. Let's take a look at this chart and try to find out how tick volume works with candlesticks, and let's find some odd tick activity. Look at this tick activity. This is the biggest tick activity in this chart that I can see. And let's take a look at the candle that represents that. Let's take a look at this small tick activity. Let's look at the candle that represents this one also. Hang on, I'm gonna show you interesting stuff on how to interpret the candlesticks with tick activity. First, you have to know a little background from price action. So you have to know this candlestick right here means rejection from the top because it's closed in the middle of that. It's bearish, follows some bullish candles. So this is a bearish candle, shows unable to make another top. You have to know a little bit about chart patterns. Look at here, this is one top, it tries to make another top, can't close above the first top. This is double top. So we have pattern formations here. And you have to know about, look at this, doji, 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 doji. Now let's incorporate the understanding of tick activity with the chart. I have some rules in using tick activity in my charts. I don't refer to it as volume because I don't want it to be misunderstood with real volume that a lot of people talk about in their strategies in VSA, in Wyckoff method. This is totally a different thing. So I will call it all the time tick activity instead of volume, although the title of this video reads volume in Forex. So what I'm doing is I look for unusual tick activity that forms. And I have one rule, one important rule, which I call the middle finger rule. Why do I call it middle finger? Because it looks like a middle finger in the tick activity chart. Look at here. It's like all of other fingers bent and the middle finger is pointing up. If we go back, maybe we can find that. Look at that odd tick activity, like the middle finger that stands out in middle of other fingers which are bent. Look at that, another middle finger pointing up to the sky. I look for these unusual tick activities and they show me really interesting stuff. Look at this one right here. What kind of candle is that? A bullish candle in an uptrend, closes in the middle, shows weakness. We know that already from price action. But look at the tick activity. This is really big tick activity. And it doesn't matter if I'm using my broker's software, using the online time to trade, online charts, which I'm using right now. It doesn't matter. It stands out. This kind of candle, this 1 hour time in the Euro USD lifetime stands out from the previous one, from the next one. You can see a lot of activity on this one, a lot of struggle to go up, and it's just rejected back down. What does it show? A lot of struggle between bulls and bears in an up move. Shows exhaustion of the up move. Let me go forward to find another middle finger, another point to the upside. Look at that one. That one was a big bullish candle. In every point of view, a big bullish candle with this size. What does it show? Take a time, think about that. What does a big bullish candle show? Does it show strength? Strength of the upside? Or does it show weakness? You will be surprised to find out whenever you see a big candle like this, and especially when the reaction to that is a bearish candle, is the classic sign of weakness, especially when it is combined with high tick volume activity. The price goes up, a lot of struggles between the bulls and the bears, and after it finishes, it's pushed right back down. If we get a 2-hour chart which merges these two candles together, what will we get? A bullish candle starts from here, goes up, then rejects back down, the same as right here, closes in the middle. See, the same thing. And also, if we separate this candle to 2 candles, we get one candle that is really bullish, closes to the top, and another candle which is bearish, closes in the middle. Which, if we combine those two, we get this one. Okay, this is the basic rule, middle finger rule. Another use of tick activity is that it gives us more information to the price action. It shows us a new dimension besides the price action. Let me show you an example for this one. Let's talk about this candle. This is a bullish candle, closes in the middle, shows weakness, high tick activity, means a problem to the upside. This is a small candle, moves really small, but it has actually a high amount of activity to itself. So it doesn't show weakness. It means this candle means bulls are not powerful enough. This also means bears are not powerful enough. Shows some kind of sideways ranging activity, as you can see in the following candles. It tries to go up, gets rejected, then tries to go down, gets rejected. The next thing, let's find out in high activity candles to analyze. Look at this one. We are actually ranging in this market, trying to go up, trying to go down, failing, and the range which is narrowing. This is the signal that a breakout is about to happen. But to where? I can strongly tell you only this type of analysis, tick volume analysis and Elliott wave, can show you high probability setups for these kind of ranges trading, to find out from before the breakout which way the breakout could be. This is the uniqueness of that. This is how powerful this tool is, and I'm gonna show you right now. Look at here, high volume, high tick activity on a bearish candle which has been rejected by the top side, and a double top which I showed you earlier. This is sign of weakness, a sign that it's not going upwards. Let's see the next candle. The next candle is bullish. Look at that. The size of the candle is smaller than that. It means the range the price has been moving in is really smaller than the previous one. But look at the activity. This is surprising. This is interesting. I can show you what price was doing during the formation of this candle. Look at my cursor. It's been going down, up, down, up, down, up in a crazy way. Finally closed in the center. Let me show you what happened during the formation of this candle. It had a really small activity, a real small body. It did something like this. The movement was slow and then closed in the downside. But this one, crazy activity during the formation of that, and you can see the spread, which they call in the volume spread analysis VSA, the range between the high and the low is really small compared to the previous candles, but the activity is the biggest, and it's bullish. What does it say? It says there is big struggle in going up, and that's it. Look at the next candle. This candle is bearish. The activity is somehow half of the previous candle. The range is about the same range if we compare it to the activity. You can see this bearish move was really more certain, more determined, less movement, and it closed in the lows. So I can see clear sign of weakness just by looking at these three candles. So after I see these three candles, I short the trade, hoping for a breakdown to the downside. Let's see what happened. Let's try to go up a little bit, and this candle formed. When I'm talking about tick activity, guys, keep in mind we're looking for unusual activity in the volume chart, the volume indicator, which is this one, this one, this one, and this one. And we're looking at unusual activity in the candlesticks. This is unusual activity going up crazily. This is unusual activity falling down crazily. This is unusual activity, and look at that. We see small candles all the way, and suddenly we see a big bearish candle. This is unusual activity. Once we see that, we take a look at the activity it has, and look how crazy it is. Look at how surprising it is, how beautiful it is. This is a bearish candle with a good size, really good price range, really good spread. Look at the activity. The activity is low. I know those people trying to sell you their VSA stuff would say low activity means low volume, means low interest to the downside. They might even tell you this is no supply indication. But look at the interpretation of tick activity. What does tick activity mean? It means no struggle. This is the same thing I told you in the example. There is 10,000 selling orders and only 1,000 buying orders. What does it do? Do bears have problem pushing the price down? Absolutely not. Crush the price down easily. And look at the activity, lowest among the previous week even. This is a sign of weakness. Let's see what the price did after formation of this candle. Ranging sideways, and then fell back down. Fell down. Look at that. Fell down. It made another low. It started falling down and nothing could stop it. Can you see how powerful this is? It's just looking at some candles and finding out the direction of the trend. Another middle finger. Look at that. Pinky, ring finger, middle finger, point finger, thumb. What does it show? It tries to go up, can't, tries to go down, can't, closes. The reaction to that is really relatively small bullish candle with somehow not low activity but not as high as the previous one. It shows lack of weakness, lack of the price falling down, but doesn't show a big strength that the price is going up. But as we can see, the price has been falling. Now it's time to pick up a little bit, retrace a little bit, and this clearly shows that. So what we should be doing, comparing the size of the candle spread between highs and lows, the type of the candle, and compare it with the volume it has. If it's a small candle with a small volume, it's normal. It's a big candle with big volume, it's normal. You might think it's not logical, but it's normal. Look at this one. The body of the candle is big, the body of the candle is small. Look at the volumes, they are equal. It shows that the downside has a lot of struggle, so it's not going downside. Look at that, it rallied up. Now we can compare these two candles. They have the exact same body spread, but the high and low are different. Look at the activity of them. The first one right here, which is bearish, has low activity, means no problem to the downside. The second one has more activity, problem to the upside. When we have candles with the same size bodies, we have the chance to compare them perfectly. Look at this. Low volume, high volume. Low activity, high activity. Low struggle, high struggle. Low struggle to the downside, price goes down. This is as simple as that. Now that we've covered most of the important stuff about tick activity analysis, let me give you one important note. Tick activity analysis is not a trading strategy. You can use it combined with other trading strategies and trading plans, but it's not a single way to set up trades, to enter trades, or to exit trades. Always try to combine that with other methods. And the plan of this video is to increase your edge with your current trading plan. And if you're looking for a trading plan, I will be uploading my own trading plan in the near future. And don't forget, subscribe to the channel and keep in touch. And I wish you all guys a great trading career. Have a good time.